Good morning. I hope you're doing well, and welcome to today's edition of the London Session Open. It's Friday, June 15th. So happy Friday to you guys. I hope you have something nice planned for the weekend if you have the weekend off. Okay, we're going to take a look at the markets. We had some big moves happening yesterday with the dollar in particular, and on the back of the ECB rate meeting. So we're going to discuss that. And we're going to take a look at things like stock markets and commodities. Now, please bear in mind that trading financial markets unfortunately is risky, and this is a risk that we lose all of our invested money. Especially if you're new to trading, then check the risk disclosure statement out. I'm quite sure that most of you guys are familiar with the risks involved with trading, but as you know, there's always someone that is new, and it's important that everybody sort of has an idea of sort of the risks involved, because there's a lot of people online that make you think that it's very easy to trade, where it's actually quite difficult. Okay, this is the euro versus the USD. Massive sell-off yesterday, and from the very high to this morning's low, decline of 312 pip. And the reason for this is straightforward. The market were quite hawkish on the ECB. They were giving it about, I think it was 73% likelihood that on their June 6th meeting of next year, that they would increase interest rates, not by a lot, but from negative 0.4 to negative 0.3. So not a huge move, but the market was anticipating at least that we're going to have some sort of a change. Personally, I mean, I've always been a bit skeptical. I did publish this article where I said that the euro could tumble down to 117.15. I published this on May 1st when the market was around 120.50, something like that. And the reason for this is that wage growth is very slow in the EU, and inflation is not particularly high either. So I wasn't anticipating, but then I don't really trade on the back what's going to happen necessarily 1 year from now, because it's very difficult to sort of get it right that way. Anyway, the market was prepared for a rate hike, and that got ruled out by the ECB. Now, the market fell off, and I did an up-to-one trading pretty much here, and I said this is a bearish move, and most likely the market will probably continue to trade to the downside, which it did. It took out this low, and the market is now, from this point, to turn bearish. Well, in essence, gave up my bullish view. And I think the general view here is that, my view is that this market will probably gonna try to take out this May low, which is not the trend defining level, it's just the May low, and that is the 1508 level. And then if we take out this level, we'll trade over to the June 29, 2017 high, and then maybe down to the July 17th level. I think in general as well, if you just look at this weekly chart, there's a lot of stuff going on here. But if we sort of trade below the May low, we definitely leave behind this low and this reaction point here. And when you take out a big level like this, the market will try to target the next big level, which is down here at 103. So definitely more to the downside, I think, on the price taking out the May low. And even below the July low, you have the June low, or June 9. That. So, game plan for short-term traders is a bearish bias, and as long as you're below 115.53, that is sort of the new trend defining level. And where will people probably sell? Well, people looking for good risk-reward ratios probably took the fibs already. They pulled them from the very high to the very low, and probably pretty much were a bullish position should have been stopped out yesterday should the market roll over. Here as well, you have the 4-day or 5-day EMA, and so this makes a good spot to assume that the market is going to try to roll over. In fact, I think it's going to do something like this, and could obviously push a little bit higher, but eventually just lower. And then if we take out this low as well, I think we could potentially do something like that. This action in other markets as well, and I'm gonna show you something special. So this is the Aussie. So this is a weekly chart in the Aussie. You can connect the line here. This is from January 2016, and this is December 2017. Sorry, January 2017, and this is pretty much December 2017. So you see 2016, 17. So you have all these lines, and we took out this level, and this is just a breach of this big pattern. And we're moving to the upside, and now we have that big bearish candle, which sort of marks a resumption of potentially move to the downside. And I suspect the market could potentially maybe go all the way down to 71.60. So that's something I'm focusing on. And here, much like the euro, the market is quite oversold, so it does not make too much sense to actually sell it here. We need that corrective move. It's extremely important to have those risk-reward ratios. Yesterday, in fact, I traded Singapore dollar, and I was stopped out. But this was sort of my idea. I actually sold worst possible price. I will show you the daily. I pretty much sold here at the bottom, and my stop loss was just above this daily low. Why? Because heading into this event, this candle was actually bearish, and I was risking about 64 pip, and then the idea was this is gonna move to the downside. That's 111 over 62. That's 1.79 times my risk. And my average risk reward for the last few months has been close to, I think, actually from January's, I think it's about 2.5 or something like that. And if you look back from December, it's even better. I think it's close to 3. And that's speculating and trading most of the time. You're getting a few small hits, and then sometimes you get these, well, I would say maybe 40% of the time, 45% of the time, you collect the big tickets, so the big profits. So that's sort of how trading works, and you need to be very flexible. Imagine I was stopped out yesterday. Now I'm already looking to sell and buy some dollar. Not this pair, but in, say, the Aussie dollar, maybe the euro. Now let's take a look at Bitcoin. Bitcoin is bouncing. So we got some good news for Ethereum yesterday, and there was a representative from the regulators in the US. I don't know if it was like an official statement, official stance, but the news said that Ethereum is not going to be considered to be a security, which is really good, because it sort of doesn't threaten the current structure of the crypto markets in the US, which is that everybody, well, all the cryptos are traded on unregulated entities. Oh, hello. Oh, yes. I just want to check. I thought I had issues with the sound. All right, so let's move along here. So the fact that it's not considered to be a security is good. And now technically here, the overall trend remains bearish, and as long as trade above 7,800, there's no real reason for us to change the bias. I think traders trading in the short term are probably looking to sell what we are right now, and I think stop loss orders goes just above 71.02. Now, even if we take out that level, it's not necessarily going to result into a major low. For me to buy, I want to see the price stop creating lower and lower highs. And I think in this section here, we'll create another of these highs. And then, we're just going to keep track of those highs. So that's what I'm going to be doing. So like in this situation here, the market turned bearish, and I was bearish here as well in these presentations. But when the market stopped creating these highs, lower highs, so when the market traded here, it was time to turn bullish, and one could have bought here, tried to hang on to this for as much as possible. And it's the same thing here. Don't want to be buying in a downtrend. Here's crude oil. Crude oil is actually moving to the up, obviously. I think just wait for that breakout. That's it. Here's gold. Gold had an interesting experience yesterday. Gold is up quite a bit against most markets, and a break to 1307, could push it to the upside. But the dollar itself is quite strong. But if you look at gold against dollar. If you look at gold against, say, the euro, and silver against the euro, and silver against the Canadian dollar, the silver and gold is doing quite good, and I think that sort of caused a spike to the upside. I think in general here, again, sort of, if it establishes itself above the May 25th high, this can head to the upside. Whereas if it trades below the June low, it's probably going to drift lower. Now here's the DAX. DAX is shooting up higher. Why? Well, because the euro is lower, and when the euro is lower, it becomes more interesting for sort of German companies, or easier for German companies to export. Good little defense there against Trump tariffs. Now, what's going on here then? Well, at the high, and this is trying to, clearly short-term bullish, and you're having a bit of a catch-up. So these markets are catching up a bit with the likes of the S&P and the Nasdaq and the Russell 2000. Now, as long as trade above this level here, and this is pretty much yesterday's low, I think this market could potentially continue to head up to the upside. Obviously, the best entry would have been here in that breakout. And if one is not already long there, you need a little bit of corrective move, maybe first fib, 50% correction, and then potentially from these levels, probably head to the upside. But you also can think logically about this. If this market is just going to move to the upside because of the euro dollar, then maybe you're better off just trading the euro dollar, right? Because the euro dollar, we understand, is much more straightforward, and the euro dollar has some serious potential if we trade below the May low. So position ourselves for weakness could potentially be very interesting, especially if we do get an entry here somewhere, and then that level holds and we do actually trade lower, then that could be interesting. Because again, it's about those risk-reward ratios. Now, we don't always have to trade. If one is not comfortable, you should not trade. I try to avoid trading on Fridays or in general, just because it's the end of the week, and I'm just more tired well, not more tired, I literally just a bit tired by the end of the week, by holding positions and working here at Amana and things like that. So I don't take too much positions on, but if we have these reward ratios, if we follow the trend, then it does tend to work out fine. Okay, let's see if we have any quick questions. Antonio says, what a day. Yeah, definitely. It was definitely a day. It was a very volatile day. Very volatile day. And it's interesting, I think, Fed financials, Fed macroeconomics, and US sort of economic conditions obviously influence price, but the monetary policies itself, or the statements, don't really influence. It's really interesting that over the last few years, it's on the back of the ECB sort of that things move a lot. It's not necessarily on the back of the Fed. Obviously, higher interest in the US definitely influence the euro, makes things interesting, and is a key factor. But the actual reaction in the market, well, that's the ECB. So we got a question here from Vasilios. If we can take a look at the pound. Sure, let's take a look at the pound. And the pound is under pressure as well. So I had a bullish bias. Don't remember exactly if it was here or here. We need to look that up, but it doesn't actually matter too much. We can see here how the price is trading higher. I think it was the June 1st low. I think the price was obviously higher, low, higher, low, higher, low, or like similar sort of low. Push to the upside, traded below support, and when we took out this level, the market plummeted. So now very close to its May low, and I think it's gonna probably swing to the upside, but up at these levels, the risk-reward ratio favors the downside as well. So here you're looking at a potential risk of 1% or 144 pip. And if we take out the May low, I think prices are probably going to target the November lows down here. And that's it really. Up, down, probably down. Okay. Yeah, definitely. Okay, guys, have a good day and a good weekend. And don't forget to support. If you like it, hit that like button. Click here. Oh, already 3 likes. That's awesome. So let's try to get this even more. And don't forget to share, and don't forget to follow on Twitter if you're not doing that already. You can follow me on Twitter on AlexFX00. So if you have any questions, you can always just send me a direct message here. You can also use this WhatsApp if you want to. All right, have a good day, and I'll speak with you guys on Monday morning. Thanks.